come clawing. Let's claw away. So we have your total income. We took out some above the line deductions. Then we looked at your standard and itemized deductions. This brings us to your total taxable income. From here, what we do is we take your taxable income and we throw it into this. Now, these are the tax tables. They can be found simply by going online and Google searching the income tax brackets for either your state or your federal. This is going to be for the federal because I'm not putting up all 50 states. I ain't got that kind of time. When you're looking at this is going to help you determine where you pay taxes. Quick note, the US has tax on a threshold basis, which means if you look up at the top, it says anywhere between 0 to an upper limit. In that limit, that's your tax rate, 0%.
Ladies and gentlemen, this is your quartermaster speaking. The captain misspoke when he said 0%. He meant to say 10% is the first tax rate, as shown here. Here's an example. In 2020, if you are a single individual and have $10,000 of total taxable income, then your first dollar up to the $9,874th is taxed at the 10% rate. Only the remaining $126 are taxed at the 12% rate, and not the total amount. And now I'll let the captain finish the rest. Have a great day.
Now, once you dip into the next tax bracket, it is not the entirety that is getting taxed at this new tax rate. It is just every dollar above whatever that limit is. And that continues on down through all of these different levels to make sure that you are paying the appropriate amount of tax, not more than you're supposed to. Now, we have everything ready to go. We've put your income into the tax tables to figure out what your total tax liability is. What's next? Well, like I said, it's deductions and credits. So let's look at credits. A tax credit is a dollar for dollar reduction of your tax liability. There are two types, refundable credits and non-refundable credits. A non-refundable credit will reduce your tax liability down to 0, but not below. What this means is that at the end of the road, we've done all the math, you owe $100 in tax, but you have a $250 non-refundable credit. 100 minus 250, well, that brings us to 0. It would normally be negative 150, but non-refundable doesn't go below, so you're at 0. Now, same scenario. We find out that your end result is $100 in tax, but you have a $250 refundable credit. What these will do is reduce you to 0 and then go below. So same example, $100 minus the 250 credit, negative 150. What this means is that there's $150 coming back to you because of the refundable credits. There are a vast amount of credits that are available with many different criteria. What I'm going to do to save some time is I'm going to have Mr. Jones put them up in a crawl, and I'm going to go ahead and have a drink. Now, feel free to pause because there's a lot of information in here. I want to make sure you get it all. And again, any questions, throw them in the comments. It's important to know that your personal income taxes are going to be due on April 15th. For this year in particular, there's been an extension, so they're actually due July 15th, so there's a little bit extra time, but normally it is going to be April 15th, and next year it's probably going to return back to it. The only exceptions to this rule are if April 15th happens to fall on a weekend or a federal or state holiday. Reason why I say that is because there is actually a holiday that happens on April 16th. It is Emancipation Day. It is celebrated only in the state of Washington, D.C. I know, not a state, but they celebrate it anyways. And to be honest, it's probably a holiday we're all going to be celebrating a lot more often very, very soon. So this is on the 16th. So if for some reason the due date is ever the 16th, it will get pushed back an additional day because of Emancipation Day. Look, I would love to have the longest conversation about the world's driest material ever. No, I wouldn't. But the facts are that the tax code is very dense. It takes a lot of time. There are so many things to go through. And there is one more thing I even want to go through right now with everybody here as far as individual taxes go. It is the Schedule C. The Schedule C is the most important thing for anybody out there that has the side hustle. So this is something like selling on Amazon, working some kind of job where they're paying you cash, starting your own business, whatever this may be. This is an avenue that actually provides you with great tax benefits. Not only are you going to report your income here, but there is a slew of different deductions that are available to you now because you do have the business aspect to what you're doing. So I do not have the time to get into everything today. We are going to end up covering that in later episodes here at the Captain's Coffers. So please do not hesitate to click into those episodes because they're going to be important to you. We want to make sure you're best equipped to handle all financial situations that do come your way. That being said, we are about done here. If you've made it back, this is not your first time here. It is wonderful to have you back. Thanks for stopping by. I love being able to help you learn and grow through your finances, your taxes. We have a lot more stuff coming. If it is your first time here on the channel, thank you so much for stopping by. And hey, welcome to the crew.